Good morning from our global headquarters in New York. I'm Manus Crenny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set your agenda.
Futures march higher after Chair Powell signals that the Fed is close to cutting rates in September. Next up, it's the Bank of England's turn. Traders boost their bets on the first rate cut since the pandemic. And Meta's AI push pays off. Meanwhile, Qualcomm sees a flattish year ahead. Apple, Amazon, Intel, they all report next. Good morning, Manus.
Danny, good morning. There is a musculature to this rally that you saw in tech yesterday, which was risk on, a flamethrower of risk across the market from the Powell presser, which is the rate cuts are coming. But it didn't come with a massive rotation into the Russell. Yes, Meta is up. They've upped the capex. We'll talk more about this in a short while. They're upping their overall capex, and that patience that Zuckerberg asked for in the first quarter seems to be rewarded by the market at the moment. NVIDIA. What a massive turnaround, up 13% yesterday. 24 hours ago, it went on the top of the list at Morgan Stanley, and up it went by $329 billion. That obliterated its record one-day move. So there's something for everybody, for the bond bulls, for the equity bulls, and indeed for the dollar bears. Bonds, as you can see, there's a couple of things there. I mean, at the moment, it's pricing in 27 basis points of cuts in September at one juncture yesterday. That's over the normal. Bill Dudley, of course, says, look, why wait? Likewise, Jan Hatzius, dollar yen, Danny. I mean, there is something really here. There's a momentum here in yen. Macquarie says it's a formidable rally and you could get to 125. And don't be frightened. We will stop off at 140 along the way, according to our Monday. Danny, good morning.
Good morning, Manus. We talked about this yesterday, that we had the yen strengthening piece of the puzzle, and we just waited for the dollar weakness. Well, we got it. The bar to cut in September, Powell made it clear it is low. This is, I think, the key thing of what he said, Manus. We have to weigh the risk of going too soon against the risk of going too late. What you see is the judgment of the committee that the time is drawing near. It could be in September if the data supports it. Dario Perkins of TS Lombard saying, short of wearing a T-shirt that said September cut is coming, he basically couldn't have said more.
I think the market heard jobs, jobs, jobs. It heard about the employment situation. The downside risk to the employment mandate is real right now. And that's sort of what invoked Bill Dudley again to say, look, why wait now? And likewise, Jan Hatzius makes that. Talking to State Street this morning, they're saying it's going to take evidence of a hard landing to keep the steepeners alive. What they hear is soft, yes, weak, yes, but not hard yet.
I have to say, his discussion about the jobs, just inherently in there was a contradiction. I think a lot of people pointed this out. He said that he didn't want to see further slowing in the jobs market. But in the same breath, he also said that there is a lag in monetary policy, and it is showing up now. If you believe that and you don't want to see further weakness, why would you wait to cut? Well, it's almost as if they're scared of their own framework.
Well, is the jobs market just normalizing? Is that the new transitory? I think that's my favorite line of yesterday, which is, just normalization is the new transitory for the jobs.
Oh, I thought we put that word away. We're using transitory
bring
again.
It back.
Oh, boy.
Get that T-shirt out and reprint it.
Okay, exciting. Well, along with Powell, the other thing that got this market going was earnings after market. Meta this morning, Meta reported, let's get a check on it this morning, up some 6.4%. It has a huge AI R&D spend that will continue, but it did help them sell more targeted ads. Here's what Mark Zuckerberg had to say in their earnings call yesterday.
There are all the jokes about how all the tech CEOs get on these earnings calls and just talk about AI the whole time. It's because it's actually super exciting, and it's going to change all these different things over multiple time horizons.
AI is super exciting. Let's get to it with Bloomberg's Tom McKenzie. He talked a lot about it, and we have these huge spend numbers. So what did we take away from the results?
Yeah, and look, everything about Meta, or at least a lot about Meta, ties into what you were talking about earlier, which is the rate cut environment, but also NVIDIA. And then one of the reasons why you got that lift in NVIDIA was not just the expectation around rate cuts, but also expectation that companies like Meta, a key customer, of course, for NVIDIA, will keep purchasing those GPUs and that hardware and those chips. And that was reiterated from Mark Zuckerberg. He said, look, AI is going to affect almost all the products in our portfolio. And as you say, Manus, he raised that range in terms of the guidance around capex for AI from 35 to 40 billion, now from 37 to 40 billion, and said he's going to keep spending. They will keep spending on this technology because of the importance and because of the impact. But there seems to be a bit of a sweet spot for Meta as well, because they are starting to see some benefit of the AI that they are integrating across their products in terms of ad sales. Greater efficiencies, higher priced ads, better targeted. That is paying off for them.
Well, we're going to get a little bit more of an indication in this Mag 7. Apple and Amazon will finish out the week of big tech results. Amazon will focus on the cloud. Apple, we really want some clarity about whether the worst is past for them in China and in where they are on pricing of their iPhones and that outlook, because we've had a little bit of a delay in the AI sprinkles in the Apple story, we understand.
The AI sprinkles in the Apple story. I love it. Yeah, look, Apple have had 5 out of the 6 quarters where sales have actually fallen. This is expected to be a quarter where they buck the trend. Sales expected to come up about 3%. And you're absolutely right. It's the focus on what they guide around iPhone 16 and the Apple Intelligence that we know is going to be put into place at a bit of a later date than some had expected. October, some of it coming to play rather than September. So it's what they look ahead to when it comes to the iPhone 16 and that AI component is going to be crucial, and the Chinese market as well. We've seen a little stability, at least according to Apple. There's been a bit of a mixed picture in terms of the data we get from the government, the data we get from some of these agencies, and the data that we get from Apple itself. But it seems like possibly there's some stability at the higher end part of the price point when it comes to the Chinese market. So that will also be important for Apple. On Amazon, it's going to be about AWS, the cloud business. They still have about 50% market share, around 47% market share globally for cloud. We saw the challenges around Alphabet, a little bit of softness in their cloud business, Google Cloud, and also Microsoft Azure as well. Will AWS come out with a stronger picture when it comes to the demand for cloud? And are their investments in AI in cloud also generating further upside? That will be in focus for Amazon, as well as the e-commerce business as well. Don't forget that's part of the play.
Danny and I are there. We're loyal upgraders.
I'm not. I'm still on a 12.
I'll take you on a trip down to Chelsea and we'll pick one up. Tom, thank you very much. Let's see what these Apple and Amazon numbers are later on this evening. Our guest this morning is Angelo Zino, Vice President of Equity Research at CFRA. So if I reflect back to Meta's results in the first quarter, the stock tanked by 19%. Zuckerberg asked for patience. Last night, he upped the lower end of the capex number by $2 billion to $37 billion. What's materially changed that we should give him more patience and believe that he's spending more and our reward will be higher? Good morning.
Good morning. So thanks for having me. So as far as Meta is concerned, listen, I think they're a little bit different than some of those other cloud companies out there. Those mega, cap cloud names, Microsoft, Amazon, and Alphabet. They're kind of seeing more material upside in terms of the AI side of things, because essentially on their end, it's kind of getting access to these GPUs, installing the capacity in there, and then kind of realizing higher demand out there. It's a little bit kind of murkier when it comes to the Meta side of things. Meta, we believe, is getting the benefits of AI, of course, through the improved rankings, recommendations within their ecosystem. They're seeing greater content out there as well. So that's a huge plus. But when you kind of look at the longer term opportunities out there in terms of monetizing Llama, in terms of these AI agents, along with some other kind of Gen AI initiatives that they have out there, that's going to take a little bit longer to play out. So that's kind of why Zuckerberg is preaching some of that patience out there. That said, he's doing an absolutely phenomenal job, we think, in terms of managing the OPEX increases as well as those CAPEX increases, along with kind of the fundamentals that they're seeing on the top line side of things. So right now, as far as these results are concerned, better than expected on the top line, as long as they can execute on that side of things, especially in the face of more challenging comps in the second half of this year. We think the street will continue to be patient with them.
And he said over and over again, once in an interview with our Emily Chang, once in the earnings call, that basically he would rather do too much, spend too much, build too much when it comes to AI versus do too little. Angelo, when will we know what the case is? Whether these AI companies, Meta, Microsoft, you name it, have been overspending?
Yeah, no, I think that's the question everybody kind of wants an answer to, right? And you kind of look at what Alphabet said, and they kind of gave a similar type of response last week. And Microsoft may be a little bit different, as kind of the focus on their end is kind of some of the constrained environment they're in right now, right? In terms of that capacity. So, that said, we continue to believe this is kind of a multi-year upgrade cycle, specifically on the cloud side of things. It's a little bit different as far as, again, Zuckerberg is concerned and Meta, but we do think, this is going to kind of be a multi-year upgrade cycle. They're going to need to kind of continue to upgrade their compute capabilities because the world is just moving so fast, and kind of what NVIDIA is doing on the back end of things is going to require these companies to continue to need to upgrade. And I think really at the end of the day, kind of the opportunity that these companies see in terms of artificial general intelligence and kind of the revenue opportunity they see kind of more 3, 5, 10 years down the line will likely mean that these companies will continue to aggressively invest here for years to come. So yeah, again, 2024, 2025, probably not going to be peak years in terms of CapEx spend. And if you actually look at the free cash flow potential and generation, not only of Meta, but across the Mag 7 names, CapEx has significantly increased, north of 3x here over the last 6 to 7 years. So, the CapEx kind of levels will start to moderate in terms of the year-over-year growth rates, but they'll continue to be very strong as long as the free cash flow levels of these companies continue to show good growth.
I'm just curious to get your take of how much concern you talk about the politics and the election coming up. There's a risk of a change in the White House. It could be a form of VC. In the form of the vice president there in the White House. But if you think about what he said, he looks at Lina Khan over at the FTC. It's one of the few people in the Biden administration, I think, that is doing a pretty good job. So when you look at the politics, does the market not hesitate on tech until they see a specific change in the White House?
Listen, I think as far as kind of the regular landscape is concerned, and how traders or investors kind of look at it from a tech perspective, I think there's always going to be concern from a regulatory perspective and kind of who's in the White House, and kind of even some of the geopolitical issues that are out there. Even more so even for a company like an Apple or what have you. But that said, I think it's a risk out there, and there's a whole kind of slew of concerns to be mindful of, whether it be Meta as well as these other names. But right now, I think, investors are really kind of taking a wait and see approach. And these things do have a longer tail out there when you kind of look at some of the concerns that are out there. So again, I think it's a risk that needs to be, that we need to be mindful of, but it's not necessarily something that, investors out there are too worried about at this moment.
Well, that risk was partially responsible for the back half of last month of July of a sell-off we had in tech, of this rotation trade. Mag 7 is now down more than 10% peak to trough before yesterday, entering a correction territory. From what you've seen from earnings so far, Angelino, is that enough to turn sentiment, to get the rally back going again?
So, our view kind of has been, and we actually had earnings season kind of, put some of our concerns out there on kind of the tech side of things. We do think kind of valuations got a little bit overextended. When you kind of look at the biggest component within, the tech side of things, it has now become semiconductors because of the growth that we've seen within names like NVIDIA and Broadcom, among others. So our view was you were going to see about a 15 to 20% correction on the semi side of things, at least a 10% correction on the tech side of things. We've kind of run through a lot of that. But that said, we do think kind of that the tech and semi trade will probably be choppy here over the next couple of months. Part of it is going to be kind of election-based geopolitical nature, as well as kind of the fact that they do need to digest some of the gains that they've seen, as well as kind of the valuation expansion that we've seen here. So our view, expect some choppiness here over the next couple of months. But that said, this pullback, we do think, represents a pretty good opportunity for investors that maybe have missed the boat a little bit and that are kind of looking for that long-term opportunity.
Well, Angelino, good job in calling that sell-off. We'll have to have you back when that chop starts. Angelina Zino of CFRA, we appreciate it. Okay, let's get some of the top stories that are trending on your terminal this morning. Shell reported second quarter earnings that beat estimates. It also confirmed another $3.5 billion of share buybacks. Strong upstream earnings helped to offset weakness elsewhere, particularly in refining and nat gas.
Former President Donald Trump openly questions Vice President Kamala Harris's racial identity. Trump spoke at a contentious roundtable at the National Association of Black Journalists yesterday in an effort to reach voters of color. Harris condemned the comments, calling out the same old show of divisiveness and disrespect.
The U.S. said that the world should acknowledge that Venezuela's opposition won in last weekend's election. President Nicolas Maduro doubled down on his claims of victory. Venezuelans continue to protest the election, while the socialist president has intensified the rhetoric against his opposition.
Well, coming up, Ackman's IPO dreams collapse after difficult questions from investors. Pershing Square's U.S. fund pulls its IPO. We discuss.
Plus, he's long called for no cuts. What does he think after yesterday's Powell? We're going to speak to Apollo's Torsten Slok on Bloomberg Brief. Welcome back to Bloomberg Brief. Danny Berger and Manish Krani in New York. So Bill Ackman's Pershing Square has withdrawn its IPO after downsizing its $25 billion target. The billionaire writing in a statement, "We will report back once we are ready to launch a revised transaction." Let's get over to Bloomberg's Tom Metcalf. So Tom, we go from 25 to 4 to 2 billion to 0. How did this happen?
Yeah, it's quite the come down, right? So no, I think it's one of those things where, Ackman has this outsized presence, increasingly a profile that sort of transcends Wall Street due to sort of all his activities, almost in the cultural wars of America. And, a lot of these big numbers were obviously coming from Ackman himself. And I think, the reality obviously started sinking in pretty quickly that, actually sort of the interactions on Twitter, the sort of media fetting he's getting from some quarters doesn't necessarily translate into, cold, hard cash when it comes to Wall Street. And, a lot of people who maybe suggested they were going to be supporting this transaction probably faded away. And now it's really not clear, when they can next come back to the market.
We've had a veritable feast of European banks, from the French to the Brits. One of those is Barclays. Now, the buyback was delivered, but how did the performance of the institutional side of the bank do?
Yeah, solid set of results. And on the institutional side, those equity traders for Barclays really did well, up something like a quarter. Kind of in common with a lot of other European banks where they've seen a big outperformance there. FIC, or the fixed income side of things, not quite as impressive, but broadly speaking, the investment bank did enough to come in ahead of estimates. And you're seeing a bit of a jump in shares, in part because of that buyback, in part because of the institutional side, and also the retail side had a pretty strong guidance boost.
Manus mentioned the French bank SocGen on the other side of things, declining this morning. What went wrong there?
Yeah, it was really the retail sort of guidance there dragging that bank down. Again, equity traders did phenomenally well, but the French bank coming out and saying, hey, look, our NIM guidance is going to drop a bit. We're still sort of struggling on that side of the business, and shareholders really sent the shares down. So I think something like 6 or 7% at one point.
Well, Danny and I certainly recall that the CEO, Mr. Krupa, when he was in charge of the investment bank, he came on with the tubes. He said, we're going to have massive bonuses. I think basically that's going to be a little bit of a shift, perhaps, in that narrative for management. Tom, thank you very much. Tom Metcalf there in London. Coming up on the show, Israel's military says it has confirmed the killing of Hamas's second-in-command in a strike on Gaza on July 13th. More on the breaking story. That's next. Context Matters on Bloomberg. It is Bloomberg Brief. I'm Manish Krani alongside Danny Berger in New York. To the Middle East, Israel's military says it has confirmed the killing of Hamas's second-in-command in a strike in Gaza on July 13th. Jumana Basechi is with us in Dubai. Jumana, the details on this, we've literally just had a headline drop on this. So just fill it out for us in terms of what we know, because we were very unsure that this individual had been taken out back on July 13th. So this is a significant step forward in information.
Exactly. So the IDF just put out a statement saying that Mohammed al-Daif indeed was killed in that attack on Khan Yunis that happened back on July 13. Now, originally, Hamas denied that he had been killed, but according to a statement put out by the Israeli military, he was indeed taken out in that attack, which means it's the second political leader, senior figure within Hamas to be taken out just in the last 24 hours. He was the second most senior person residing in Gaza. The main leader, the leader at large, Yahya Sinwar, still is living in Gaza. But it does tell you that as far as Israel are concerned, they are working towards the goals that of the war that has been in place since October 7, which is namely to neutralize Hamas's military capabilities and to take out senior leadership. Indeed, the Defense Minister Yoav Gallant just put out a statement saying that the actions in the last couple of weeks, you should say, because it's not just Mohammed Deif, but of course Ismail Haniyeh, who was assassinated in Tehran the night before, those actions all contribute towards their war efforts of neutralizing Hamas. And all of this is taking place at a time where you also want to think about the Hezbollah front as well. There was an airstrike that took out the second in command of Hezbollah, that is the Iran-backed militia operating out of Lebanon. The Hezbollah leader, Hassan Nasrallah, will be delivering a speech later today. So everyone will be watching out for what he has to say in terms of remarks and a potential retaliation from the Hezbollah front as well.
Hey, Jomana, we only got about 30 seconds here, so sorry to push you, but just ceasefire talks. Where do they stand after all this?
People in the region are very negative about the possibility to move forward with ceasefire talks. And I think that Qatari PM's tweets yesterday said it all. He said, how can you continue with these negotiations if one side assassinates one of the key negotiators on the other side of this roundtable? So people are very negative that these talks can continue.
Right. Jomana, thank you very much. Jomana Bercecci, anchor of Bloomberg Horizons Middle East and Africa. Of course, Israel's had the posture that you weaken Hamas. It makes negotiating easier because they come from a position of weakness. All right, coming up, we're going to speak with Torsten Slok, Chief Economist at Apollo. From our global headquarters in New York, I'm Danny Berger. Alongside Manus Cranny, let's set your agenda.
Futures march higher after Chair Powell signals that the Fed is close to cutting rates in September. Next up, Bank of England in the spotlight. Traders boost their bets on the first rate cut since the pandemic. And Meta's AI push pays off. Qualcomm sees a flattish year ahead. Apple, Amazon, Intel all hit the tape today. Danny.
Manus, what an end to the month. How wild that you see Mag 7 enter a correction, and then on the very last day, NVIDIA adds $329 billion to its market cap. The most ever. That rally continues this morning, not in the same sort of force, but S&P futures up 0.2%. NASDAQ outperformed slightly after Meta earnings. Russell 2000 futures, those are lower this morning, so that rotation stops dead in its tracks. Along with equities, you also had a rally in this bond market yesterday, fueled by Powell, where 10-year yields hit their lowest since February. We undo some of that this morning, higher by 2 basis points. But it wasn't just Powell. It was also the month end and tensions in the Middle East that had this flee to safety. All of that also resulted in higher oil prices, with Iran warning of a retaliatory strike against Israel. Oil this morning up, Manus, by 1%.
Cuts are on the table, and the other thing that the market really focused on, those are the words of Powell, of course, are the downside risks to the employment mandate are real now. So again, really leaning into the dual mandate side. Inflation, it would appear, evidently, it is more or less under control. But I think what the market heard and what the bond market heard, which was leaning into this dual mandate. And that takes you then to Bill Dudley, who says, well, why are you waiting? Why did you wait now? Likewise, with Jan Hatzius sort of coming in with that narrative, which is if everything's lined up, why the delay?
Well, the problem is him talking about not wanting to see materially weaker employment figures. There's a huge contradiction in that, because it's almost as if they're scarred by what happened during the pandemic and no longer listening to their own framework, because by Powell's admission, policy operates with a lag. He said this yesterday. So if policy is operating with a lag, the weakness is showing up now, and already the labor market is weakening, but he doesn't want to see more weakness. Why would you keep rates restrictive?
Well, we're going to have that debate with Torsten Slok, who says that, what you've seen in the labor market is a lot of immigration turning up. The other sort of alpha that you had in the bond market yesterday was the Treasury re-emphasized that they don't need or foresee the need to increase coupon issuance. And that gave us another leg higher as well. State Street this morning are basically saying it'll take evidence of a hard landing at this point to keep the steepeners alive and working. And they don't see that yet. Softness, yes. Weak, yes. But not a hard landing at this stage.
It was a remarkable rally in the bond market, 5-year going below 4% for the first time in some time. We also have a BOE decision today to contend with. Knife's edge decision on whether or not they will cut. Outside the Bank of England for us now on Threadneedle Street is Bloomberg's Lizzie Burden. Lizzie, just why are we so uncertain here in an era where central bankers have been at pains to broadcast their decision?
You're absolutely right, Danny. Traders very much in the dark because we haven't heard from Andrew Bailey since May because, of course, we've had an election and there's an unknown quantity now on the Monetary Policy Committee in the form of Claire Lombardelli voting for the first time as a deputy governor. So, as you say, very much on a knife edge whether we get a cut from the Bank of England today. There's a reasonable chance that actually they hold and wait for September to have the full cover of the Fed. And all they do today is signal that that move is coming. But it raises the credibility risk. If you say you're a data-dependent central bank and headline inflation is already back at 2%, why are you not cutting? I think I sound a bit like Bill Dudley maybe here, but let me tell you the reason why they wouldn't. You've got services inflation last time still coming in hotter than expected. But if you strip out the volatile elements of that, and they've acknowledged that that volatility is there, and I'm talking about the likes of the Taylor Swift effect on hotel prices, actually you see that services inflation is coming down. So look, it's a really hairy data picture. It is on a knife edge, but from a communications perspective, if they don't take the opportunity to cut today, where they've got a press conference, an updated forecast to explain themselves, if they wait for an opportunity like that to come again, which won't be till November, there's a big risk that actually inflation goes up again and they miss the window.
Well, I, for one, am maybe not looking forward to more central bankers talking about Taylor Swift. Anyway, it is what it is. Lizzie, thank you so much. Bloomberg's Lizzie Burden. And tune into our interview with BOE Governor Andrew Bailey. That will be at 12 p.m. Eastern, 5 p.m. in London. Okay, let's turn back to the Fed because Apollo's Torsten Slok weighs in on a September Fed cut. Hope writing, quote, "We still have 2 CPI prints before the September meeting. If inflation continues to come down, then it is likely that they will cut. But it would be a mistake to cut if inflation starts moving higher again." Torsten joins us now. Torsten, great to see you. Thanks for joining us this morning. Look, you were really upfront and ahead of saying the market is pricing in too many cuts, and you had been calling for no cuts. Clearly, things have changed with a Powell that set the bar low for a September move. So perhaps he will cut, Torsten, but should he be cutting?
Yeah, and I think that exactly as Manny was saying, the dual mandate is the right starting point for that discussion. What really is remarkable in the US, in the UK, and also in Europe is that we still have quite strong growth numbers. So the challenge for the Fed, for the BOE, for the ECB is that growth has actually been quite strong, whereas inflation has been coming down. So we had in the market and even the Fed been expecting that the economy would slow faster for the last 5-6 quarters. That hasn't happened. So that does raise the question, why should the economy be slowing faster over the next 2 quarters if it didn't happen over the last 5-6 quarters? So for the Fed, I do think that if we do get inflation still moving lower, they have now promised us that they will be cutting rates in September.
Torsten, let's just go back to the jobs. I mean, I would say both for the bond market and the equity market, they heard very clear narratives about rate cuts and they responded. They did the classic response. But the downside risk to the employment mandate is real now. That's what Powell says. You don't share just that level of bearishness on that side of the dual mandate. You say the economy is fine. You've looked at a lot of high-frequency data. But you also say that the jobs numbers are up because of immigration. People are showing up and not getting fired.
Yeah, and that's exactly right. So a number of different labor market indicators, they do look softer. Most importantly, the unemployment rate has gone up from 3.4 to 4.1. And the consensus expects still 4.1, so a sideways movement on Friday here in the July data numbers. But the conclusion is the same, namely, exactly as you're saying, Manny, that the increase in the unemployment rate is because of immigration having increased so much. We are not seeing, and this is also what the JOLTS data earlier this week confirmed, we're not seeing layoffs increase. So in other words, the reason why there are more increases in the unemployment rate is because there are more immigrants, more people showing up and wanting to have a job in the labor market. So in that sense, also from jobless claims, we're not seeing any dramatic increase across the board. When you look at labor market indicators, things are still pretty strong. So that fits with the broader picture of the high frequency data, in particular the daily and the weekly data, still confirming that people are still traveling on airplanes. We still see people going to restaurants. Hotels are very strong. You see across the board, sporting events, concerts, basically the consumer and the US economy is still in a quite good shape. And that's very important when you think about this fear that there is so pronounced that the labor market is about to fall over the cliff. That's simply not happening.
Torsten, I think one of the things, though, that increased that fear was those exact sectors you were just talking about, their earnings reports. Airline after airline said that they had less demand than all the capacity they had. Marriott had earnings yesterday, which fell because they're seeing less demand too. Do the earnings not concern you that maybe we should be listening to the companies and the headline data is missing something?
Yeah, that's really important, Danny, because yesterday when Powell was asked about this, it was very striking. He said the anecdotal evidence is mixed. As much as the markets put a lot of weight on all the negative things coming out of earnings, we saw negative things coming out, partly from the earnings report from PepsiCo, from Delta. We also saw McDonald's earlier this week. But if you really read carefully what the companies are saying, it is consistent with what he discussed yesterday in the Beige Book, that the anecdotes, some of them are saying, in particular, the lower income consumer segment is showing some more signs of distress. But if you look at higher income consumers, there is certainly still, in particular in the airline example, premium sales of tickets in business class and in premium economy are actually doing quite nicely. So from that perspective, it is still a quite mixed picture overall when it comes to what the anecdotes are telling us. Because I do agree, if all the anecdotes were negative, then we should begin to worry about that showing up in a more negative way in the macro data. But just, for example, the employment report that comes out tomorrow, the consensus expects 175,000 on headline, 4.1 on the unemployment rate sideways. That's not a slowing economy. So in that sense, it is a bit misguided to only focus on the negative parts of the anecdotes, because there are also a lot of positive anecdotes.
Torsten, can we just extrapolate a little bit further from Danny's point? Let's just go forward. I'd love to have a vivid imagination as we go towards Friday, which is the companies are right, pricing power, consumers are struggling, the companies are losing pricing power, China is slowing, Europe is slowing, there's not enough stimulus in China. Could it be that the next iteration or evolution is not that, inflation high is transitory, is that we move to a deflation or a disinflation, and we're just not seeing it?
Yeah, so the headwinds to the economy are the headwinds that we've had since the Fed started raising rates in March of 2022, namely higher rates. Higher interest rates is a problem for consumers that have a lot of debt. It's a problem for firms that have a lot of debt, in particular firms that have low coverage ratios, meaning very low earnings. So in tech, growth, enterprise software, life sciences, it's not surprising that firms that have no earnings are experiencing distress. That's why in credit and in private credit included, of course, it is most of the distress seen in those industries that have no earnings. Whereas if you look at the positive things to the outlook, you still have a significant tailwind coming from the stock market going up, home prices going up, and most importantly, the level of yields. If you own private credit, if you own spread product and fixed income, the cash flows you're getting at the moment are the highest they've been in decades. Yeah. So the tailwind, in particular to the consumer, is very strong for those who own fixed income. So in that sense, it is a more balanced outlook than just looking at the negative things that are weighing, especially on low-income consumers.
Torsten, to that point, again, where we started, you say it would be a mistake for them to cut if some of the data over the next month comes in hotter, if you see some of that inflation data coming in. Torsten, there's been this concern, Mohamed El-Erian is one of them that voices it, that by not cutting in September because of one or two bad prints would be data point dependent and not data dependent, because the trend points that way. Why are they wrong?
Yeah, so I think that debate, if you really think about how the Fed has communicated to the market over the last 6 months, it's been very clear that they wanted to, what they describe, normalize interest rates. And in this sentence, normalizing interest rates is the simple idea that our star, meaning where we are going in the long run, is lower than where we are today. That's why we've had this long debate now for almost a year about what is the level of where we are going. Is the level where we're going 3? Well, then we're at 5.5 today. Then we have a long way to go. If the level where we're going in terms of the Fed funds rate is more like 4.5, well, then we are no rush to cut interest rates dramatically. So this debate about how far are we going? And he also was asked a lot about this yesterday, including from your own Mike McKee. Well, what is the path after this cut that might be coming in September? And he was very, very hesitant to give any guidance about whether we're getting a few cuts or a lot of cuts. The data will determine that. But so far, it's clear that the market in Fed Fund futures is telling us we are just going down a little bit from where we are now. Rates will be permanently higher because the market is not predicting that interest rates are coming down. So in summary, everything we have talked about I would characterize what's going on that we are slowing, but we are not crashing.
Okay, slowing, not crashing, and we never quite got to the Bank of Japan with its hawkish hike and what that's going to do to the flow of money. Save that for the next time. Torsten, thank you very much. Torsten Slok, Alpha Apollo, our guest this morning on Markets. Good morning from New York.
There are all the jokes about how all the tech CEOs get on these earnings calls and just talk about AI the whole time. It's because it's actually super exciting and it's going to change all these different things over multiple time horizons.
That was the Meta CEO, Mark Zuckerberg, yesterday after the tech giant reported results that beat the estimates. The company announced it would continue with huge AI R&D spend to continue to help them sell more targeted ads. Here to break down the number is Tom McKenzie. Tom, I mean, he did a good job. If we look back, 19% lower at the end of the first quarter numbers yesterday. The market believes in the dream. I'm going to sell you a dream. I'm going to target the ads, and I'm going to deliver the return on equity. Just come with me on the journey. It's only going to cost you another $2 billion from what I told you in the first quarter.
And that case to convince is going to continue, isn't it, for Mark Zuckerberg and the team? But for this quarter, $39 billion in sales, above the estimates of around $38 billion. So to your point, beating on the quarter and then projecting forward that they will continue to see strength. You heard him, of course, talking about that investment in AI. This is one of the few companies building, mega cap tech companies building their own large language models. Alphabet's doing it as well. Microsoft and Apple are not. They're relying on partners. And that build out of LLM and those models costs a lot. And he raised that guidance then in terms of the spend on CapEx to a range of 37 billion, not 35 to 40, but 37 to 40 billion. But the market seemed to be accepting this because they're already integrating some of this technology into Instagram, into some of their other products, Reels, and they are seeing that pay off. In terms of the targeted adverts, they're able to charge more for their ads, they're greater efficiencies away they target into their customers, and that is starting to pay off. By the way, the numbers of people using their products, 3.3 billion globally, largely you would have thought down to the fact that Danny has her quick wit on social and you're doing your videos, Manus.
That's what's moving the dial, Tom. That really is moving the dial on Instagram, kid.
Yeah, I'm not so good on social, so it's all Manus over here. Tom, in about 11 hours' time, we're also going to get Apple and Amazon results. What's going to be the focus?
Okay, so for Apple, and this was interesting in terms of the analysts looking at the earnings today, it's going to be less about the quarter that they're reporting on and much more about projecting out in terms of the kind of shipments they see from this iPhone 16 that launches officially in September. That's where the lens will be, according to Evercore and the team there. But also, as well, Apple Intelligence. Yes, their own version of AI, and part of that is going to be integrated a bit later. For Amazon, it's all about AWS. You're expecting an 11% increase top line in terms of the earnings for Amazon. And to what extent is the cloud part of the business, AWS, performing, and can they outperform their rivals like Alphabet and Microsoft that have faced those challenges? Amazon and AWS still the giant in terms of the global market share with 47%.
Tom, we appreciate it. Again, we'll get those earnings after the market close, rather. Tom McKenzie on the tech latest. Okay, let's turn our attention to Washington, D.C. VP Harris has fired back at Republican nominee Trump after he questioned her black identity. Take a listen.
She was always of Indian heritage, and she was only promoting Indian heritage. I didn't know she was black until a number of years ago when she happened to turn black, and now she wants to be known as black. So I don't know, is she Indian or is she black?
Donald Trump spoke at the annual meeting of the National Association of Black Journalists. And it was the same old show. The divisiveness and the disrespect. And let me just say, the American people deserve better.
Well, Kamala, let's go. Challenge accepted. Are you ready? Let's compare our record. Point by point.
Joining us now from D.C. is Jack Fitzpatrick of Bloomberg Government. Jack, I got to be honest, it's hard to listen to those Trump comments. To what degree does it underscore the difficulty of a Trump campaign who has a new matchup in areas that Trump was quite weak in before?
Yeah, it does make it clear that a new opponent is something the Trump campaign seems to be struggling with. And you see it in the polls tightening, in the big fundraising numbers for Kamala Harris. but also the questionable decision-making. I think a lot of people in DC were scratching their heads as to why Trump agreed to go talk to the National Association of Black Journalists. A lot of this campaign he has kept out of trouble to a relative degree, at least when he was leading in the polls over President Biden. The agreement to speak to the NABJ and then really shoot from the hip, claiming very falsely that the vice president has not publicly said that she's black. She went to Howard University, which is an HBCU, is a data point that shows the difficulty he has with a new opponent who seems much stronger and could energize particularly Democratic voters with a message, among other things, that she would be the first black woman president and also the first Asian American president. So some work to do, clearly, from the Trump campaign's perspective.
Jack, good morning. There's more work to be done for Vice President Harris when she chooses her running mate. Who really has the final sway on choosing this running mate? Because it looks as if there's a bit of pushback against Mark Kelly, and Shapiro may well be the better fit. And that comes down to perhaps those people who backed Biden.
Yeah, there's a big question about the strength or weakness of certain potential candidates among labor unions. And that's something to keep an eye on now, because Josh Shapiro seems to have a stronger hand in that regard than Mark Kelly. There's been some pushback, or at least skepticism, from labor to Mark Kelly, partly because he didn't co-sponsor the PRO Act bill to largely make it easier to join unions. He has said he would vote for the bill, but there's some skepticism about his consistency and enthusiasm toward labor compared to some other Democrats. That, combined with the fact that Josh Shapiro has recently met with representatives of the Harris campaign, seems to really put a spotlight on Shapiro. But as to your question of who has final sway, it does come down to the candidate herself, Kamala Harris, who needs to make a decision about who she trusts, who will do no harm, who she thinks she can stick with overall. So the labor angle is a significant angle to keep in mind, and does seem to be cropping up lately in favor of Shapiro over Kelly. But there are still plenty of factors to consider as Harris makes a decision, maybe sometime soon.
Yeah, well, the president of the Transport Workers Union says Kelly can't possibly be seriously considered as a vice president. So I think that's sometimes where the money talks. It does shift the narrative. Jack, thank you very much. Jack Fitzpatrick there. Coming up, eco data for you, big tech earnings. What more could you possibly want ahead of your jobs report? We'll give it to you all. Danny and myself right here from New York. Good morning.
Get you set up for your trading day on this Thursday. First up, a Bank of England rate decision at 7 a.m. Eastern. That will be followed by Governor Bailey's news conference, then U.S. PMI, ISM manufacturing, 9:45 and 10 a.m. respectively. And finally, Amazon, Apple, Intel all report after the market close, Manus.
Yep, another feast of tech, and we're counting down to that jobs report tomorrow. Interesting, Torsten Slok seems to have pivoted from no cuts to a tweak.
Yep, the idea is normalization, but the endpoint matters for where we go, which is why he says the Fed shouldn't be spooked by incoming data.